Good morning, everybody. Welcome to the start of a brand new week. It's the 11th of April. We are Signal Centre Talking Ball. I'm Joe, joined by Steve and Jamie. Good morning, gents.
Morning, mate. Well done on
Morning,
your
Joe.
run at the weekend.
Thank you very much.
Smashing the marathon to pieces in Brighton.
Yes, I was pretty pleased. So thank you very
Nice.
much, Steve.
Under
Very
two
good.
hours, not too bad at all.
Under 2 hours, it's getting quicker. Again, another world record there. Under 3 hours.
That's
Yeah,
nice, mate.
it's a nice job.
Yeah, decent. Paying for it today, but
Yeah, I bet. Yeah,
Yeah, I
yeah.
can imagine.
all good. So Brighton smashed Arsenal, and then I smashed Brighton. So it was
Yeah.
1-1.
Call it a
Got
draw.
your own back.
Yeah.
You wish.
Okay, let's get stuck into the latest headlines then to start off the week. Just bring those up so everybody can have a look at where we're heading with this. So first up, the ECB is looking to cap peripheral yield spreads. Towards the close on Friday, there were reports that the ECB is crafting a tool that would be deployed if there was a jump in peripheral yields. That's according to sources. The central bank has not yet decided whether the instrument should be deployed preemptively. The euro recovered following that report with a spike to the 10880 area, although there was little evidence of sustained support given the economic pressures. Something else affecting the euro over the weekend was the runoff for the French elections. Exit polls for the first round of the presidential elections indicated that President Macron recorded around 28% of the vote. Just over 23% of the vote went to the National Front leader Le Pen. There was also an element of relief over Macron's performance as he exceeded expectations, but concerns that Le Pen had momentum into the runoff will continue to intensify over the next couple of weeks. The euro spiked higher on Monday in the Asian Open following the French result, but failed to hold on to the gains with the euro US dollar retreating backwards, which we'll come on to in a moment on the charts. Yields in the US continue to surge. The dollar has posted further net gains in global markets, primarily due to the move in US yields, with the 10-year surging to 2.77%, inching closer towards that 3% level, which I think that will be a key testing point for markets, whereby do you go for the risk-free option of just being able to bank 3% through government yields, or do you continue to speculate in markets? So we'll be watching the commentary and the comments from the Fed officials in the short term on that. Markets also braced for key battles in East Ukraine. The latest military intelligence continues to indicate that Russian forces are massing on the eastern border of Ukraine with the intention to launch an aggressive attack on the Donbass region, with the aim of forces to join Russian forces in Ukraine. So still very much the situation is ongoing there. And finally, on the news front, there was solid Canadian jobs data on Friday. The latest increase in employment was for 72,500 for March, after a 337,000 gain in the previous month, which was slightly below the forecast of 80,000, but still pretty strong nonetheless. So let's leave that there for the news and get stuck into some charts. Who wants to kick off today? Steve, you're going to be looking at
Cryptos.
cryptocurrencies.
Yes, I am. And looking at this weekly chart on Bitcoin to start off with, and we've seen a retest of the break of the neckline. We've got this break of the neckline, which happened in January. We've had another retest of it and another failure to hold on to gains. And also this three candle formation here is an evening doji star formation, which is very negative and should lead to further losses this week. So really, if we want to focus in on what we were talking about last week, we had this triangle formation, which was, well, actually a little bit better on the 4-hour chart. This triangle formation, which had a false break to the upside, which caught me out, and then had the breakdown lower. And we've had another rejection from this 43,500 level. So we just reacted off 41,775, trading a little bit higher than that. And again, looking at maybe a little bit of a corrective formation or a bottoming formation before further negativity is expected. So on the back foot, cryptos, probably along with the indices, but I think someone else will do the indices today. I'm going to take a look at both oil and actually, I'll take a look at gold. That's a little bit more interesting for me at the moment. We've seen a nice little uptick on Friday. This was a nice little rally into the 1950 resistance area, and we've stalled here. So that's the level to watch. A break above there should lead to further gains, targeting a move to 1766. Sorry, 1966 World Cup year as far as England are concerned. If we do get breakdown below 1940, that'll reject it. But it's we've got a nice solid 4-hour candle in this bit of an impulsive move higher. So really looking for a break of 1950. Also, just take a quick look at Joe mentioned 10-year yields. And taking a look at these on a weekly chart, we can see quite clearly we've got this head and shoulders formation, which has played out really nicely. So take the move from here, left shoulder, right shoulder. I'll put the head here. Here's the neckline, right shoulder here, if it lets me do it, and higher. So really nice formation. Broke through the neckline, retested the neckline, and is projecting higher. Now, a measured move target of this is pretty decent. Measured move target.
Scary, if anything.
5.5%. So is that where we're going? We're halfway there already. 2.75. Yeah, further upside, and that'll be levels we haven't seen since
2000.
2000.
Wow.
So one to watch. Be aware of those interest rates. It could take a good while yet. We're talking about maybe 12 to 24 months to get to that sort of level. But yeah, haven't seen those rates for sort of 20 odd years. Yeah, one to watch.
Yeah. So I can flick over to indices now, because who remembers what happened in 2000?
Oh, not .com.
There was a tech crash.
There was a tech crash. It's all making sense now, Joe.
It is, isn't it?
Lucky you've got people on this show that are this old, Jamie, because obviously them sort of things.
You wouldn't even know markets existed before then, would you?
Yeah.
3-year-old me wasn't doing much in the market. So I'll tell you that.
Probably making more sense than some we do sometimes, but yeah.
So this is the Nasdaq 100 index. So we've seen prices rally quite sharply from sort of middle of March up to a 61.8% fib level, which pretty much to the tick stalled that rally. And then we've seen prices continue to move lower pretty swiftly, really. So there doesn't appear to be any signs of this slowing down. I mean, maybe at some point we could see this form into an inverse head and shoulders, but given that the longer term trend still looks, pretty strong, I'm not too convinced. Maybe what we're even seeing is a really large top pattern take shape would be maybe my preference. But all in all, it doesn't look great for Nasdaq at the minute. And looking for sort of where the next levels of support come in, if we look for some fib levels from this low here to this high, then we've got 61.8 down here at 13,832, which looks to be a reasonable level to target on the downside. But clearly we are posting lower highs and lower lows, so I wouldn't back against this getting a retest at some point and maybe even heading even lower. Doesn't look great at all for the Nasdaq as things stand. If we take a look at the S&P 500, it's holding up a bit better than what we're seeing with Nasdaq, but again, are we forming a huge top here? Is this a left shoulder? Is this a head? And this, some last right shoulder that we're making here, and this being a neckline potentially, big downward sloping top, pretty scary stuff, I think.
Yeah.
But for now, it's not there, so I'm expecting more chop, to be totally honest, more sideways price action and difficult trading conditions in these US stocks. One market that is completely disregarding all of that is the FTSE 100, which, for many years has lagged all the other markets due to the heavy weightings that it has in commodity-linked stocks and banks. So obviously, with oil prices remaining pretty high and commodity prices, doing spectacularly well, we're seeing the FTSE back up at the highs at 76, 78. So this is the highest price that we've seen since February, and going back prior to that, we had to go to sort of pre-pandemic levels back in January 2020. So trying to get above that level there. Whether or not it will, I'm not sure. But given the way commodity prices are moving at the moment, you probably wouldn't back against it. So, buying FTSE and selling maybe one of the US markets could be a pretty solid trade. That'll do on the current indices front. Then let's have a quick look at currencies. Dollar index making new highs on Friday. I look to try and fade that into the $100 level, and my stop was just a little bit too tight, so I didn't make any money on the gun to the head trade with that one. Posted a bit of a shooting star candle on Friday, and we're pretty flat as things stand. So there is room, I think, for a little bit of downside on this to just pull back some of those gains that we've made. But overall, it still looks pretty positive and still expecting higher prices. Obviously, we have seen a bit of reaction from things linked to the euro today. So following the sharp move lower on euro US dollar that began on the 31st of March, we saw some support come in line with this kind of 88.6% fib level and these previous lows from the 7th of March. We gapped higher on Sunday night, but we are lower than the open as things stand. So there is a bit of red on the chart. Still a long way to go on the session. But is this the start of a turnaround, or will we continue to see more weakness on the euro? So a lot of this, I think, is going to be dictated by, first of all, what the ECB do, talking about tempering these yields, and also what happens with the French election. So it could be a couple of testing weeks for anything linked to euro. If you take a look at cable, that continues to trade close to the lows that we posted on the 15th of March. We made new lows on Friday, but managed to recover above the 1.3000 level. So while we hold above this, there is potential for a bounce higher, although I expect it to be short-lived and ultimately for prices to move lower in line with the downtrend towards 128.46, which is where we've got a 50% Fibonacci retracement level. So that's it for me on the currencies. Over to you, Jamie, on the stocks.
Brilliant. Thank you, Joe. As I kind of started doing last week, I'm going to be looking at the biggest winners and losers of the previous trading session. So I think AMC was our previous biggest loser that I was watching, and it's had another rough Friday again, completely failing to hold this 61.8 fib level we looked at. It did break below, and we kind of thought could be scope for more selling, and that was the story of Friday. A really negative looking candle there. We've had a succession of, can't even count that. It's like 1, 2, 3, 8 days in a row of closing lower than it opened. So not looking good for AMC. I'd expect maybe some kind of buying to pick in, but I'd still expect it to kind of come back down to this $14 level, where we had this previous resistance, and now it's support over here. So that's where I'd expect the next key level of buyers to come in. The biggest winner is actually, again, I think we had this last week, is Avacta Group. And we noticed, I'll bring us out to a weekly so you can see it a bit better. We had this kind of downward trend line here, acting as resistance. And we also had this previous support turning into resistance level. And at the close of last week, you can see it closed right at the key level. And so far this week, it's opened very strong. You can see breaking, it's gapped a bit higher and it's broken through this resistance. So a weekly close above this would be really significant to me. Obviously, a daily close would be good for bulls of Avacta, but a weekly close would certainly be very strong and something I'll be keeping an eye on. The stocks I was going to have a quick look at today, though, are some of the ones we've been looking at to actually put as signals ourselves. So I'm going to look at a couple of the ones that are doing well and a couple of ones that aren't doing so well, and then talk about why we looked at them. This is Squarespace or Block. I'm not sure if they had the name change. That maybe something I'll look into. But you can see we had this previous resistance level of 127. Resistance. We had a breakthrough, and we were looking to buy a retest. So far, that retest seems to have failed, and it seems to be still sloping lower. At the moment, the pre-market is at 120.42, so it's not looking so hot that I'd probably expect this one to head towards the stop, because this isn't the kind of reaction I like to see. I think we're actually in on this 5 minutes, a bit more specific back here. And initially, it was looking quite good, but the rally failed, and it looks to be, like I say, slumping down a bit. So not so hot on that. Another one that's not so hot is Amazon, which is almost stopped out, but similar kind of logic. We had this previous support level that held really well throughout the back end of 2021, got broken through. We had a retest, which not to the exact level, but worked quite nicely as a short. We looked to buy a retest, but again, that's not seemed to have held particularly well and looks to be heading towards the stop. But that was the logic there. We were looking at this key level. It's a very loud one to buy. Ones that are going slightly better. We have MU, which is Micron Technology. I think I've talked about this one before. But we had this really nice, it's kind of a bullish engulfing type candle actually here. I think if I pull up the volume, we had a really high volume day. And if I bring up the 50 period moving average, we had a close below that. So we as a group, we took quite an aggressive stop on this, because usually I like to have the stop kind of above the day's high, but that would mean the risk reward isn't how we want it. So we took a slightly more aggressive stop, and so far it's playing out quite nicely with a 3.46 risk reward. So hopefully that can move towards its target. And lastly, I was going to have a quick look at Renault, which is open this morning, and this had quite a nice confluence. We'll take away the 50 EMA because that wasn't relevant, and volume. But we had this quite significant sell-off on Renault, and then it formed a flag type pattern here. And I think when we initially looked at this idea, the price was trading down at the lows of the flag. But what we identified was this, and I'll zoom out to a weekly chart, you see it a bit better, was this key level of this 25.50 area, which back in, and I'll drag it across, it's quite a long time ago, but these key levels seem to hold quite nicely. Back in 2020, the summer of 2020, it held really well as a resistance. And it came back in as a resistance here, and we looked to kind of get short again. And that seems to have worked out quite nicely at the moment, again, heading towards its target. But we will see if that does hit. I'd hope it hits in the next couple of days. But yeah, that we'll leave it there on the stocks. That were just some of the ones we were having a look at last week, and some of the ideas we looked at as a group.
Very nice. Nailed that, Renault. Jamie, well done, mate.
Yes, thank you.
Okay, let's take a look at the gun to the head trade. So each trading day, the three of us pick a trade idea to trade right now. So we pick it live on the video. Each idea must have a stop and a target. Each of the ideas must also have a risk reward ratio better than 2 to 1. All these ideas are placed at market, and they expire at either 9 p.m. or when the stop or the target is hit. That's 9 p.m. UK time. And we track the performance of these over the history that we've been doing it for, which is nearly 600 episodes. So Jamie's fairly new to this, but he's maybe getting a bit of beginner's luck. I don't know. What do you reckon, Steve? He's nailed a win on cable on Friday for a 2.43R return, whereas you and I were both stopped on dollar index and Bitcoin. So collectively, had you followed those trades, you'd have made a bit of money, assuming you were following the same sort of risk parameters and money management techniques that we do. And just to be clear, the way we do this is we risk 1% of trading capital per trade on each of these ideas, and that also dictates therefore our trade size on these ideas as well. So Jamie, 10 trades in, you're 4.4R on side, and you've got a win rate of 70% so far.
I think he played us as well, Joe. Remember the first sort of like couple of trades, he sort of like lost, and he was like pretending he sort of didn't know what he was doing.
Yeah, hustler.
And then he's definitely hustled us. Yeah.
Well,
but
I think I think this is could be a real case of beginner's luck. So I'll enjoy this while it's there, but I'd expect it to be kind of come back to reality soon. But I'll enjoy it for now.
Cool.
Nice one, mate.
So Jamie, it's your honour if you want to go first, unless Steve, you've got one ready to go.
I've got one ready to go. If I'm
easy,
I've just published it actually. Really looking at this DAX trade again, the Germany 40 CFD, really sort of backing this this head and shoulders formation. I feel we've sort of retested. There could be a further retest, but I don't know. I don't know how everyone else feels, but it feels like a bit of a shaky start to the week, and potentially we could sort of like get a little run on the downside, especially on Nasdaq and the sort of European indices, maybe with the exception of the FTSE. So yeah, I'm going for a short in this. It's a 4-to-1 risk reward. And I'm looking to sell at 14,204, targeting 13,724, and a stop at 14,324, which was the swing high.
Lovely.
Very nice.
Jamie, over to you.
I'm having a look at Litecoin today. Actually, we've had this bit of a sell-off in cryptos, as Steve was looking at earlier, and we've kind of had this consolidation bearish channel type thing, which we've broken out of, and we're kind of retesting this previous support level, now resistance. This isn't the ideal price I'll be looking to get in at. I probably want to sell a little bit higher, but this is the aim of the game. It's gone to head, so we will short this at 109.4. With a stop loss, and let's just make sure this is all right. Stop loss at, where are we, 110.9, and the take profit at 105.4 gives us a 2.67 risk reward ratio.
Nice one.
Thank you.
Cool. So we are publishing these onto our TradingView profile as well. So if anybody wants to follow them throughout the day or check that we are, doing what we say we're doing, then you can find all the evidence on there. I'm actually looking at cryptocurrency as well, and for me it's Ripple. So this is the hourly chart, and as we can see, it's been trading lower for a good few sessions now. We've broken through some support here at 75.24. Bit of a bounce over the last few hours, but turning negative again, so I'm going to jump on that and sell it at current prices of 74.14, and I'm going to put a stop loss just above that resistance at 75.38, which means I'm going to have to look for a decent target. So this is the most recent swing low, so let's have a look for some fibs to target. So we've already hit the 61.8 and found some support, so I'm going to look for the 78.6, which is at 68.50, let's say, which is a 4.6 return if that plays out today. Selling Ripple, which will be published very soon onto TradingView.
Nice one.
Nice.
Okay, data-wise today, there isn't really an awful lot. Let's just have a quick look. We've got the only data of high impact is already out. It was the UK labour market report, which was at 7 o'clock UK time. But over the course of the coming week, we've got inflation numbers from the US and the UK to look forward to, starting tomorrow with the US, then on Wednesday with the UK. On the same day, we've got the Bank of Canada policy decision, so some central bank action there. And then on the 14th, we have the ECB policy meeting and also the Australian employment report. Obviously, a shorter week for the next 2 weeks, with it being Easter Friday on Friday, obviously, and then we're off on Monday as well. So, yeah, this should keep us busy enough, I'm sure. Anything else, gents?
No, I'm all good for me.
No, happy with that.
Lovely. Okay, well, have a good day, everybody, and we'll be back tomorrow morning.
Cheers.
Thanks, everyone.
Cheers, then. Goodbye.